Hello Wolfpack, big news today because Bitcoin has technically, under my charting, broken down from the ascending channel formation and the bear flag formation, right? So this is a bear flag formation, in my personal opinion, taking the measurement from the close on December 27th. I'm not taking it all the way from November because we had a higher high here in December. From a close on December 27th all the way down to the close on January 22nd. And applying that to a breakout point, we can see that this is targeting 24K, which is our long-term prediction on Bitcoin, which is where we're going to be reaching this year, possibly late this year, November to December, most likely, but possibly earlier. That's what we're looking at here for Bitcoin right now. So that has broken down. However, it's up for debate. It's a really annoying candle close because it wasn't necessarily as far down as we would have wanted it. And what we're now facing is, on crypto Twitter, a bit of debate as to whether it's actually broken down or not. One of the things people are saying is, well, what's to say this isn't the channel, right? If we apply this like this and just do that, what's to say it's still not within the channel? And, this is one of the things where it's like, well, it's hard to really say whether it's a decisive breakdown or not. And I know that's annoying to people, and I know it sounds like I'm moving the goalposts, but in reality, that's just what it is, right? We only closed literally like 150 USD higher than we opened the candle. So it's not a clear breakdown, and it's a very small red candle as well. We don't really know what's going on. Now, I'm going to act under the assumption that it's still breaking down here, but I'm not going to put too much emphasis on it. So I'm still going to act under the assumption that's broken down. And under that assumption, what can we expect next? Well, we can expect Bitcoin to do something like this. Okay, go down to this lower dotted support level at around 37K, right? That is the next logical step for Bitcoin, assuming it is broken down. Now, obviously, if we bounce back up here, that would be a sure sign that the channel actually looks something more like this, right? Because if we bounce here, you don't bounce after you break down, you bounce when you're on support. So if this candle closes green and we bounce upwards to say, 40K, right? We close it at 40K, that's a sign that, well, this channel didn't actually break down, and we might even have one more further upswing to go. All right, but as of right now, we have to assume the worst. We have to assume it's broken down. Why are we assuming this like this? Well, because this is the region in which we've had the most touches of the bottom of the channel, right? We've had 1, 2, 3, 4, 5, 6, 7, right? Any other place you put that line, any other place you set up the bottom line, you have less than 7 touches. And so this is what I see as the objective channel bottom line, and so I'm going to go ahead and say it's broken down, but people are going to disagree with me on that, so let's see what happens there. But regardless of whether it's broken down or not, and again, I think it is, regardless of that, we do have the Bollinger Bands compressing massively, which means we won't have to wait much longer to find out anyway, right? When Bollinger Bands compress, you see a big move, right? That's textbook TA. Bollinger Bands are compressing. Within a few days, we should be seeing a decisive move, either upwards or downwards. That would very much confirm whatever the scenario might be. It will confirm that, hey, this channel's still on support, or it will confirm that, hey, this is actually a breakdown. I would say we've broken down here. That's my personal prediction, especially heading into something like May. And May is very important. If we're looking at, for example, let's go to let me find it here, the bond yields, right? So this is the 1-year government bond yields in the United States, and this thing is skyrocketing massively. It's just an example, right? There's many different types of bonds you can see the yields for, but essentially this thing is skyrocketing. It's gone up like 18 or 19x in the matter of 5 months, 6 months. This thing's going crazy, and obviously interest rates are going to be risen on the 5th of May, and there's a very high chance we could be seeing a 50-point rate hike, which will drive the markets crazy. I mean, that's being priced in currently, but I can tell you right now, I mean, the S&P is only freshly pricing that in. I mean, until recently, we were making another impulse move from the last rate hike all the way up to 4,600. So let me say that again. The last rate hike brought us down to 4,162. That was a 25 basis point hike. Now we're going into a 50 basis point hike, and we're actually above where we were on the last rate hike when that was priced in. So this very well could go much lower in the S&P 500. It could go all the way down to the bottom of this wedge formation. And obviously, if it goes lower on the S&P 500, it's going to go lower on Bitcoin, which kind of confirms the theory that this is actually a channel breakdown. Again, it doesn't really matter what happens in the short term here. What matters is the macro, and the macro is bearish. And so looking at, for a hourly chart, for example, we had an ascending wedge formation going into the top of the resistance there, but we've kind of broken it back to the upsides. There's no real telling what this formation is, and this just gives you a good idea of what the confusion is in the market right now. There's a lot of confusion, and this is what happens. You can actually see the confusion. You can visualize it. What happens when you have a messy channel, right? We have a clean top. The top of the channel is not up for debate. The top of the channel is quite clearly that line there, but the bottom of the channel is very, very messy, right? There's no clear definitive line that labels where this channel ends here at the bottom, and so it leads to a lot of confusion with the buyers. And the thing with channels is that, people might say, well, if it's a messy channel, it shouldn't be a channel at all. It's probably not a channel. Well, to what I would say to that is that channels generally have fake outs. It's very common in channels to have fake outs for the upside and downside. You don't necessarily, barely ever see the price act perfectly within a channel, right? Channels, unlike triangles, unlike wedges, often have fake outs, and very, very commonly are they still left as valid channels, right? Unless you have like 50 of them. We haven't had that, and in fact, this is the first daily close below the channel. And so I would say that, yeah, this is a breakdown, in my personal opinion, on Bitcoin. If we're looking at some technicals to back that up, what we can really bring up is the fact that the RSI, let me move my face cam here, the RSI has actually broken down from that short-term support zone. The MACD has actually failed to see a bullish MACD cross, right? It's inverted away and it's kind of flattened out. And then the Stochastic Rsi, for example, as we look at every video, has suggested that the top was in at around 42 to 43k, only about 4 days ago. So yeah, I mean, that's evidence enough in my opinion, that this is a breakdown. And then also looking at extra evidence from, for example, the 50 SMA, the Ikomoku cloud, let's leave this all up actually, the Gaussian Channel, and the bull market support band, and the 75 SMA, and, a pretty large area on the volume profile. What we can see is that, that area between, let's say, 41.5k all the way up to 42.5k is extremely major area of resistance. And then that's dynamic resistance, right? So there's massive amount of resistance there. All of those zones that I labeled are resistance. And then on top of that, it's also an area of static resistance. I mean, if we're looking at where the last local high on this dead cat bounce region was, right? Look, this is a support flip. That's resistance there. That's resistance. That's a support flip there. That's a support flip. And this is resistance, and that's lining up perfectly with all of those dynamic resistance zones. So 42k is really going to be a tough nut to crack if we do end up having an impulse upwards, and we've already rejected off of that for about 2 weeks now. And so, yeah, look, it looks to me like what we've done is fall down from the top of the channel, had a rejection of 42, and crashed downwards, right? That's to me, that's a 1, 2, 3 step correction, right? It's 3-step correction, very basic move. And so, like, yeah, I would consider this a breakdown. I would say the next move is 37k, but I can't say without doubt that is the case, right? I just want that to be clear. It's like, my opinion is that, yeah, we've broken down, we're going to 37k, but it's not like I can objectively say that, because this isn't an objective breakdown, because there's no objective constitution of what the bottom line of this channel really is. Okay, let's look at volume, because I haven't actually looked at volume yet today to see what we can find. Yeah, again, so this is another thing with this breakdown. It's like, we are in the weekend, so it's hard to really say exactly there, but I was going to say that, the volume's very low on this breakdown. Usually when you see a breakdown from a channel, the volume's quite high. However, yeah, it is the weekend, so it's very hard to say whether that actually means anything. But anyway, before we get into the next part of the video, let's take a look at BitGet. In a time when government regulation constantly threatens crypto investors, being able to access an exchange without KYC being mandatory is absolutely exceptional. This is great for me personally as an Australian, because a lot of other exchanges out there like Binance don't allow me to access options due to Australian regulation. BitGet additionally is also host to trading fees even lower than the vast majority of the major exchanges at just 0.2% per trade. Sign up to BitGet using my referral link in the pinned comment below or the description box, and you will receive up to 153 USD deposited into your account as a reward. As always, let's take a look at the macro picture from people who haven't watched my videos before. The macro is suggesting Bitcoin has topped out. The macro is suggesting that November top was perfectly as expected according to the 4-year cycle theory. And the 4-year cycle theory suggests that Bitcoin bottoms out at 24k in November or December, or possibly before that point, right? We don't want to put too much emphasis on date. It's about the price that matters. And November to December at 24k, you can say, how do we get to that? Well, we get to it in the fact that, well, the 200-week SMA is the macro bottom level for Bitcoin on 4 separate occasions over 15 months total. And that's where we can expect Bitcoin to bottom again. Now, worst case scenario, and I don't look at this quite regularly, and I actually personally do not think this is going to happen, so don't quote me on this. But the worst case scenario for Bitcoin, in my personal opinion, is, let's look at this bear flag formation, get a measured move from top to bottom, apply it to a breakout point. Let's apply it to a breakout point from the top of the move. The worst case scenario for Bitcoin, in my opinion, is 14K. Okay, that sounds ridiculous to some people, but some people would also say, and so, I think it's a fair assumption to make that, the 4-year cycle is all well and good, but we are going through a recession as well. So it's not exactly a healthy market environment. So what happens if Bitcoin goes down further than the 200-week SMA because of a recession? I'd say the worst case scenario for Bitcoin, the worst thing we can possibly see is 14K, which actually marks where the highs in 2019 were, and also where the highs in February 2018 were. Okay, now again, I think 24K is the bottom. I think 14K is way too pessimistic, but I'm just saying it is a possibility. So just keep it in your mind for this point in time here, and we'll cover that later. Right? If we drop down, when we drop down, whatever, we'll cover that when we get into that drop. I think it's a bit early to start covering 14K Bitcoin. We're still at 40K, So 24K is what I'm looking at. That's what I think is the most likely bottom on Bitcoin. But there is a sizable amount of evidence for a May crash. I'm just briefly skimming over his stuff because I talk about it very often. But generally speaking, the May crash that we're expecting here is due to the fact that we have the 3-day chart 50 SMA and 200 SMA, and also the weekly chart 75, 250. We'll explain that now. So the 3-day chart, generally what we see in a bear market after the peak bull run is when the 50 crosses under the 200, we see a 50% correction over the course of a month and a half. Happened in 2015, happened in 2018, and guess what? We're doing a very similar thing to 2018 as well. We're compressing between these 2 points when they cross 50% crash in 1.5 months. And if that was going to happen again on Bitcoin, these things are going to be crossing in about mid-May, right? I think, let me just get a test here. I think it's about 10th of May, just roughly, who cares exactly when it's going to happen. We can get into that when it does occur, but I think from last point, I checked, it was about the 10th of May. Yeah, about the 10th of May, maybe the 13th of May, those things will be crossing. And so we could expect a sharp correction to start occurring in May due to that. Now, do I think it will be 50%? No, I don't think it will be 50% because of diminishing returns, but I think it will be very significant. And I have said in my previous videos, but I think that essentially we're going to be reaching 30K in May or possibly very early June. Right, I've said that over and over again, and that's not a new prediction, right? I've been saying that for weeks and weeks, almost months now, right? May/early June, we're going to be reaching 30K. That's something I've stood by. And another piece of evidence where you might say that, one chart's not really evidence of a crash in May, and I would say I'd completely agree with you, but there is another chart here, and this is the weekly chart with the 50-week SMA, the 75-week SMA, and the 200-week SMA. What you can notice is every time the 50-week crosses under the 75, we end up in the midst of a major correction for Bitcoin. Happened in 2015, happened in 2018, and guess what? The 50 will be crossing under the 75-week SMA in about 2 weeks. Coincidentally, on May the 2nd, a week before, the 200 will cross under the 50 on the 3-day chart, what we just looked at, and that would line up with a May crash. What also lines up with a May crash is the fact that, the 50 basis point rate hike will be happening on the 5th of May. So lots of things in May that are suggesting a May crash, and then on top of all of that, looking at the weekly chart, what we can see is the Bollinger Bands, the MACD has flattened out in a similar fashion to what it did in 2018, right? We saw a bullish MACD cross, but it flattened out and then we crashed. We saw a bullish MACD cross, it's flattening out currently, we might crash. And then, for example, the Stochastic Rsi has topped out, right? Which has marked basically every single top, not perfectly, but generally pretty well. In the last 4 years, okay, so it marked the top in December. It pretty much marked the 2017 top. It marked perfectly the COVID top before the drop there. It marked perfectly the 2020 August top. It marked perfectly the September top in 2021 and the November top in 2021 as well. So it marked both cycle tops, and it's marked another top here, and we started to move down. And what we can look at on the weekly as well that's suggesting a May crash is the fact that, look at this. Okay, the Bollinger Bands are compressing. We know from the start of this video that every time that happens, it means a big move's on the way. Given the macro situation, I would say that big move is going to be downwards. And then when we're also looking at something like the 50-week and the 200, what we can see is that every time Bitcoin loses the 50-week SMA, we end up at the 200. We have lost the 50-week SMA. Not only have we lost it, but we've come back up, retested it, and lost it again, just like we did in 2018. Okay, very bearish macro. I wish I could be more optimistic about it. There's simply not much to be optimistic about. And then another thing I want to bring up that I haven't really brought up before is the Gaussian Channel. The Gaussian Channel has a very clear trend on the weekly chart. It only flips red during a bear market, preceding the big drop we usually see in May's, right? Very interesting stuff, right? So this is another piece of evidence suggesting a May correction. We have seen this green, 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 just as on the 3-day chart, basically on the same day on the 3-day chart, that the 50 SMA crosses under the 200 SMA on the 3-day chart, just as we saw that 50% correction in 2015. You know, the Gaussian channel flipped red. Same thing in 2018, a few weeks before. And guess what? The Gaussian channel will be flipping red in about probably any time within the next 3 weeks, which is lining up with the May correction we're suspecting. And so, yeah, I would expect a May correction very clearly. I mean, a May correction is a no-brainer to me at this point. You know, it's very obvious to me that there will be a correction in May, unless something drastic happens. And that's why I'm not really putting too much weight on this channel formation. You know, I don't necessarily care too much about what happens with this channel, because I know that, you know, fast forward a month, the chances of us being above this price point that we're at now are very low. It's possible, and you know, if it does happen, that's great, but they're very low. So that's what we're looking at for Bitcoin right now. Before I end the video, I do want to give a quick shout out to my friend and analyst Megawell Crypto, and I have created this Become a Trader 10-unit course. If you want to learn how to trade, this thing is coming out on May 16th, 2022, and we've got 10 units, 40 hours of content, 400 slides, 80 videos, 8 worksheets, and a trading diary. So lots included in that, and it'll teach you everything you needed to know, from market patterns to candlestick patterns to technical indicators to profitable mindsets to what is Bitcoin, what is crypto, what is fiat money, what are the differences. Basically everything. It's covering everything. If you want to know more about this, check out the Crypto Academy courses at gmail.com. I also want to give a quick shout out to my Telegram group, and that is WOC exclusive. Now, last month we pulled 464% profit while the market went up 20%. We outperformed the market by about 20x. And so we did very, very well. We took about 15 profitable trades, 1 losing trade. And so this month we're continuing that pattern. We're doing quite well this month as well. Obviously the market is red this month, unlike last month, so it's a bit harder to pull profit, but we are very much profitable, and we're very much giving out good information there, good trading plans. So if you want to join that, the next join date is going to be, I think, the 11th of May. So join the information group, and you can get kind of access to all the information you need, so when that date comes around, you can join up. Thanks for watching, guys. Hope you enjoy the video, and I'll catch you in the next one. Cheers.